A type of investing we're hearing more and more about is ESG investing, sometimes called sustainable or responsible investing. ESG stands for environmental, social and governance. So what exactly does it mean?
Broadly, what we're talking about is trying to understand how a company is managing its environmental, its social and its governance challenges. Underneath that are potentially hundreds of subtopics. So environment could be climate, biodiversity, social, human rights, labour rights, governance, what's the independence like of the board, have they got bribery and corruption procedures in place. So in one level, it's quite a simple term, environmental, social governance, ESG, but it can get very complex very quickly, and you have all sorts of investment styles that can sit underneath that.
The impression we're often given in the financial media is that to invest in a sustainable way, you have to use an actively managed fund. But it's not true. You can invest in an ESG index fund, and the fees and charges you pay will be very much lower.
An ESG index is very similar to a mainstream index in the sense it's a rules-based, transparent approach to investing with this added layer of ESG. And that ESG can be very different things to different investors. So it can be, a simple exclusionary approach. It can be more complex approaches, such as things like net zero, aligning with 1.5 degrees going forward. The key thing with an index is that, we have to explain very clearly the approach that we take in creating such indices. We have to use very credible research, and the research piece is hugely important in an ESG index. And explaining the fact that these indices, they're not standing still. It's not a case of, you're in an index and you're comfortable as a company. There are requirements to keep monitoring those companies to make sure that they are still strong from an ESG perspective.
A complicating factor for ESG investors is so-called greenwashing. A fund might claim to be sustainable or ethical, but its actions might tell a completely different story.
As we see more interest in ESG, there are more and more fund managers who want to get into the space. And so there might be a temptation to label a fund as being ESG or being green, and then not being able to substantiate that with the information that's sitting underneath it. And that's a concern that many regulators have at the moment. You see a lot of that in the press. The EU is certainly trying to deal with what they consider to be a greenwashing issue, where funds are being labelled as green, but there's then maybe not the substance behind it. And green can be a plethora of things to different people. So how do you make funds easily available to the market, where it's clear to investors what is sitting underneath the fund, and really importantly, how comparable they are to other green funds?
As Jaspreet Dura has explained, ESG is a big and complex subject. If you want to invest in that way, and there are very strong arguments for doing so, it's best to use an advisor who really understands the subject, and not all advisors do.